Berkshire Hathaway just held its annual general meeting last week, and here are 8 key things you need to know about the 5-hour-long meeting. Hi guys, Stanley here. Berkshire Hathaway hosted its annual shareholders meeting virtually again this year through Yahoo Finance livestream on the 1st of May. The 5-hour-long meeting is extremely valuable and filled with wise wisdom from Warren Buffett and very candid remarks from his vice chairman, Charlie Munger. But if you do not have the time to watch the two answering questions for 5 hours, here is a quick summary on the 8 most important things you need to know. Number 1, I love it that Buffett always spends some time teaching new investors about the art of investing. I feel it is more important than ever now after the huge stock market rally we have enjoyed last year. He highlighted the top 20 company currently in the world and compared it with the top 20 company back in 1989, 32 years ago. It is interesting to see that none of the companies in the list back in 1989 remains on today's list, and the size of this company have increased more than 10 times on average. From that example, he is sharing with us that picking the winners is extremely hard. The company that is winning today might not be winning in the next 30 years. But what is true is that the size of all these top companies can reach new heights that we cannot imagine before. That is why he feels that the easiest way for us to tag on to the growth is to stay invested in index funds like the S&P 500 index funds. This is because the index will self-select only top companies to stay within the index. As new company grows, they might be included into the index, and as old company declines, they could be dropped out of the index. In fact, Buffett openly recommended the S&P 500 index and stated that in his will upon his death, 90% of his funds will be parked into the S&P 500 index funds. So if you're just starting out in investing, you might want to consider what Buffett is teaching us. Next, number 2. Buffett also explained on the criticism on why Berkshire did not act as aggressively to buy more shares during the stock market crash back in March 2020. According to Buffett, during the start of the pandemic, things are looking really bad, especially in the bond market. Therefore, Berkshire had to think about survival first in case things got worse. He praised the government for acting swiftly and aggressively to prevent an economic meltdown, but the rebound was never a certainty. So during that time, it's more important to build up the balance sheet instead of aggressively investing. This is something I regularly talk about in this channel. Investing is not just about maximizing your return. It is just as important to think about how to do it in the safest manner. In Berkshire case, and in your own personal case, before you invest, you have to think about, do you really need to risk what you have for something you might not even need at all? So think about what you are risking and what you are going after in your investment so that you can truly invest safely. Moving on to number 3, after the sharp recovery of the stock market since March last year, Buffett feels the current market is like a casino. In fact, they have been cutting their position on banks and their airline stocks, and their cash position is moving closer to the $150 billion mark. Yet, the company is not finding many big deals at the moment. That is in part of the result due to the rise of SPAC, Special Purpose Acquisition Companies. He feels such asset classes has created a gambling nature in the market and have pushed up prices to level he is not comfortable with. So for now, the best way to reinvest these cash is to buy back his own share. Up next, some gossip news. Buffett commented that new brokerage like Robinhood are encouraging the casino aspect in the stock market, and that is not very admirable. Charlie Munger went further by calling it god-awful. This prompted Robinhood to hit back with a lengthy blog post criticizing Buffett and Munger as old guards and saying that people are tired of Warren Buffett's and Charlie Munger's of the world acting like they are the only oracle of investing. Juicy stuff. Robinhood is not the only thing that was criticized during the meeting. Munger also didn't mince his word on Bitcoin. He called the rise of Bitcoin disgusting and contrary to the interest of civilization. You can be sure that he did not invest in any cryptocurrency. But what are your thoughts? Do you think Munger is right about Bitcoin, or is he missing something? Comment down below and share your view. Moving on to number 6, this is a major news for the company. We finally know who will succeed Buffett as CEO when the time comes. Greg Abel, the current CEO of Berkshire Hathaway Energy, will be the successor. Mr. Abel has been working in Berkshire for more than 20 years now. He was an accountant before at PricewaterhouseCoopers, and then he joined Mid-American Energy before it was acquired by Berkshire back in 1999. He went on to become the CEO for the entire utility business. Today, Berkshire Hathaway Energy is one of the largest subsidiaries within Berkshire, generating more than $20.9 billion in revenue back in 2020. So Greg Abel will take over as CEO for the whole group when Buffett decides to step down. Next, number 7, on Apple and on tech. Buffett continues to praise Apple and mention that when they sold some shares in Apple last year, it could be a mistake on his part. And finally, a shareholder asked Munger about his view on China after his other listed vehicle, Daily Journal, announced a new investment into Alibaba. But unlike his opinion on Bitcoin, Munger continued to be very optimistic about China and mentioned that he's very impressed on how the whole country has shifted from communism to being such a huge economy in just a few decades. So he's expecting there will be many more billionaires coming out of China in the future. So if you're also optimistic about China but unfamiliar with the market, then you can consider to start your investing journey with us. I would like to invite you to take a look at our community, our Premium Club. Our Value Invest Asia Premium Club is a publishing service where we'll share with you our analysis report every single week. Our members get to enjoy more educational content on how to invest in the stock market and also specific stock analysis where we highlight interesting companies to you, and many of them from China. We will also hold regular live webinar for members to answer any question you might have on your mind. And lastly, our community forum is also very active and is a great way to learn more about companies other members are investing in and make new friends along the way. So if you're interested to find out more about our Premium Club, I would like to extend an invitation for you to try it out. Just head over to our website to find out more. I hope to see you inside. As always, my name is Stanley. Till we meet again, invest safely.